I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market was ravaged again last week as investors' hope for a market bounce turned into extreme fear, as forced selling pushed down the indexes in a big way. For those of you waiting for that 20% number in the S&P 500 to declare it a real bear market, well, just ask most investors who are trapped in the techs and those stay-at-home pandemic stocks. The FANG stocks, all of them now have gone below that minus 20% number, and some much more. Pandemic stocks down about 70 to 90% in a just huge bloodbath in that area. And even the last holdout, Apple, now has fallen to minus 23% at worst level, no longer the most valuable company in the world. And that comes after their supplier, Foxconn, says that there are extreme supply and demand issues. Early in the week, world markets were really weak, and upside attempts here in the U.S. market were met by big selling. Tuesday's news that hedge fund manager David Tepper covered his NASDAQ shorts really instantly sent the market to the upside, with the S&P 500 gaining 80. But then it had a big reversal, fell all the way to minus 35 points, 115-point decline from its high. Then got saved again by a good treasury auction, and that gave the bulls some hope, and the markets were able to recover to some gains. Wednesday, Apple led in a big way on the downside as the tech stocks really got hammered. We saw Apple down 5%, Roku down 6%, Tesla down 8%, and Square collapsing down 15%. And all that comes after the CPI came out hotter than expected. Then the stablecoin Luna lost 86%. This is supposed to be one that's pegged to the dollar, and that reverberated throughout the whole crypto world and really sent that Bitcoin and crypto crash going down in a big way. Tether also, which is the main conduit between the fiat currency and cryptocurrency, fell to 97 cents, so that broke that dollar peg. And then Bitcoin fell to below 26,000. That hit our targets and even worse on the downside. And you can go on YouTube and you can see the video we put up there last week, which shows our analysis from March 30th for Bitcoin. It was 47,000, and we had targeted it to come down to 29 to 27,000 on the downside. As a first target, and just amazing that it's done that. We think it's going to get even worse. Thursday, the PPI came out just bad also, and those inflation hedges that you look at, like gold and silver, they were overwhelmed by the need for liquidity. Gold falling that day more than 30, down to about 18.22, and then silver falling 90 cents. It was down to 20.70 on that day, making some recoveries now. And the dollar continues to be the safe haven. These really big, wide swings that you're seeing with the S&P down 80 points and then rebounding. Well, here on Thursday, it was the small caps that really began to move on the upside. And there was a last hour big recovery where a Fed Daily came out and said, well, that 75 basis point increase, it's not being considered. So that brought the short covering in, and the market was able to recover and then continue on Friday on the upside as a very, very oversold market tries to move up again. And here, as we are doing this video around midday, the S&P 500 is up about 80. It had been up about 90. So some good, solid bargain hunting, bottom picking going on here on Friday. And the stabilization now in crypto, based on Tether getting back to that $1 peg, is also taking some of the fear out of the market, and the Bitcoin market has been able to recover about $2,000 today, trading around $30,000 right now. So a stabilization, we'll say, going on right now, but we've seen this before, especially these last couple weeks where these up days are really followed by a lot of selling. Stock market participants have gone now from looking for a bounce, which of course what they've always seen that for the last couple of years, and that has always, given investors higher prices or a way to get out if they wanted to sell, to now the must-sell stage, as prices are melting away and the margin accounts, well, they're under huge pressure. And that's what happens when these markets begin to implode and fall just on themselves. And one can just feel the thickness in the air as the upside fails and these upward spurts just stop, and then the market begins to move back to the downside. Our analysis looked for a bottom to come sometime around that first week of May, and then to rally up through May and maybe even early June, and then turn down again. But now, based on our new analysis and these patterns having changed through this weakness, we think the upside is more limited. We'll talk more about that later on in the show. And we put out a tweet yesterday, which I thought was interesting. I mean, the good news is that the bear market's about half over. And the bad news is the bear market's about half over. And that's in line with what we believe and have believed all along, that this would be somewhat of an average or worse bear, which is 30-35% on the downside, ultimately, maybe a little bit worse than that. But the NASDAQ already down 30% from its peak, and that could be 50-60% down before we see the bear market bottom. We have been warning, and here it is. For the week, major indexes down 3%-ish or a little more, and that's after this Friday rebound. 30-year bonds, they are up about down about 3 points. They were up about 3 points, and they were even better than that. The TNX, the 10-year yields, they made a high of 317, and then right now about 293 in the 10-year yields. And even a little bit lower than that I could see right now. And that's down about 22 basis points for the week. Gold market loses about $70. It traded at sub 1800 level. Silver down about 44 cents, and that's with an upside reversal here. Now about 40 cents, with silver now up on the day here on Friday, counter to a weaker gold market. And Bitcoin, as we said, a really rough week, down about 6,000 on the week on that stable coin. And we think 18,000 is coming on the Bitcoin market. And in my opinion, that would be an extremely high price still. Dollar still very strong, up about 0.9% on the week. And the oil market down about $1. It was down $11, but then a big comeback. And there are, talk of more sanctions and what the EU is going to do. So the oil market, we think it's stuck in a range, in a big wide range between the low 90s and about 116. And I think it's just going to keep trading in that zone. You can learn more about that on all of our futures analysis in FutureSpeak, which is a member video for level 2, 3, and 4, always on Wednesday. Coming up, we have great stuff here. We have a preview that Avi is going to bring you on the member video on the gold miners, and he's going to show you analysis on the gold mining index, GDX. Then you're going to really get to meet Arvi as we have an ongoing series of Meet the askSlim team, and we have an interview of Arvi Ramachandran, one of our great cycle analysts, and I think you'll find that interesting. I am going to give you some analysis on you looking at the FANG stocks and using those to project the timing of the bear market that we are now in. And then don't scroll forward, because we have this amazing special going on for level 3. And I'm going to show you 10 different things that are in that for an amazing price and really great support for traders and self-directed investors. And then I'll give you the short-term view of the S&P 500 for the coming few weeks. So make sure you go to the askSlim website and explore around there what we have. You can become a free member or take one of our specials. If you're watching on YouTube, please do subscribe to our channel. Click the notification bell so you know when we post videos. And do like this video. Give it a thumbs up. On Twitter, follow us at askSlim. And any questions you might have about our website and offerings, please write matt@askSlim.com. All right, this is a preview of our member video, which Arvi does. Lots of these. Every other week he does stock sectors, and then the other weeks he does a look at setting up short-term swing trades. Just fantastic work that he does. And so this video for members is all about the gold mining stocks with a bunch of them in there. But he's going to show you right now a preview looking at GDX, the gold mining index.
So now let's go ahead and look at GDX. Let's pull over GDX here and go back to the weekly. So this is GDX, and you can see this is also selling off really right on time. When we are late in cycles, you can see the risk on the downside here in each of these periods where any little rally attempt could not hold. You can see that right here. Any little rally failed back on the downside here. We tried to rally. It was likely too late in the cycle, and you can see sellers came right back in here. So what are the highest odds favor? Well, we have a key intermediate term bottom due 516.274. There is a very key cycle low here at 28.83. We would like to see this overall hold up over that in order to really stay positive. If it doesn't, it would really lower our overall upside targets for that next intermediate term rising phase. So we'd like to see this overall hold up a bit here. You can see this is starting to act a little weaker as we've already moved through this 78.6 at 31.5. So certainly a sign of weakness here. If we shift over to the daily chart, you'll see what we're looking at. So we formed a very weak low right here. You can see the short-term low formed on 5/2, got a 1, 2, 3-day rally, and then broke the low. That says that this dominant cycle on the short-term has turned down. Now we have a minor cycle here with a minor cycle low due right around this middle of May. So what does this look like? Well, we can see we would look for a little bit more on the downside, likely to test this short-term 78.6 around $30 even, then get a modest rally in this rising phase, and then one more test down prior to likely forming that both short-term as well as intermediate term low, and then get into a better period here in GDX. Now the next key short-term low is due 6/6 to 6/15. So in that early to middle part of June time period, that's where we would look for a bottom to form in GDX. So overall, what we would favor right now is really more range trade here. Given this very large sell-off, we would look for really more range based trading to set in here, and then watch for better action as we get into this early to mid-June time period back on the upside as we get into the likely rising phase on the daily as well as on the weekly. Okay, so that's the overall picture here in GDX.
Superb, Arvi. Just great. Thanks. And now we're going to let the whole world out there meet who you are. This is the ongoing series of Meet the askSlim team, and this is my interview with Arvi Ramachandran. I think you're going to find it unbelievably interesting. Hi, I have Army Ramachandran with me here, and this is an ongoing series as I bring a little brief interview of our analytical team so you get to meet everybody who does all the work here at askSlim. Arvi, welcome. I'm glad we're doing this.
Thank you. Good to be here.
Yeah, yeah. So what I want to do is just, we'll keep this kind of short. I kind of wanted the viewers to get a sense for who you are, how you came to the financial world, and so a little bit of history there, and how we got together, and where we're headed right now. So let's start with some history about what got you interested in the markets.
Yeah. So, well, it started when I was about 14 years old. I got a little bit of money to trade, and you know, I took to it almost right away. I was able to invest at good timings in the end, and over say about 10, 15 years, built up a decent size. Had some decent growth, let's put it that way. And I went to full-time trading back in 2012. So I've been trading since then. And and then I found your work in, it was 2012 or 2013. I saw you showing your work, sharing your work, and my eyes just lit up. I've never seen anything so interesting, so different, and I said, "There's something here." So I then spent the next, up until now, basically doing your work solely, and it's been amazing for me.
So I remember the moment because, of course, I was on Tasty Trade doing
Tasty
the 1
Trade,
hour
yeah.
show every day. And I remember the moment that I received an email from you that said, Slim, I saw that you said that you may be sharing your charts someday. And if you ever do that and you need an assistant, let me know.
Yeah.
So I remember that moment. Now I started in 2012 with Tasty Trade, so that's the right time.
Mm-hmm.
And then I probably got that email from you a couple of years later.
Right.
Yeah.
Yeah. I mean, but throughout that whole time, I was sending you I would say almost weekly emails asking you, well, what's happening here? This is what I'm seeing. What are you seeing? And you were amazing in answering all of my emails. So thank you.
Well, you're welcome. So then when I decided that it was the best idea for me to go off on my own, you're the first person I thought of contacting because I knew I need some assistance, and you were like ready to go.
Yeah, 100%. I knew that this is what I wanted to do, and there is no better way to learn than to learn from you. So
yeah, well, I appreciate that. So you were actually pretty highly credentialed because you did get your degree in this.
Yeah. So I got the MBA in 2019, CFA as well. I passed those exams back in 2012, 2013. So I've done a lot, and certainly like read a lot as well over the years. So I've learned a lot about many different ways to make money to really make money, right? So that's kind of, and then you have to figure out based on that what fits you, what fits your style, right? And that's what I spent years just honing. So
yeah. Well, I gave you the askSlim unofficial certification as an expert psychoanalyst many years ago.
That's right.
But we've been actually a great team before we expanded the business, and now we have 4 analysts, so we've really begun to grow. And of course, we have a huge growing viewership right now. Just a sentence or 2 or 3 on how you feel about our approach to analysis versus traditional mainstream approach to analysis.
Yeah, so I would say we use what we see and then read, meaning what we see and then try to understand what's likely to happen based on that. Most systems out there, they're looking at, okay, this is going up or down, and that's likely to keep happening. We take a little bit different look at that. We say, well, this is what's happening based on everything that we're looking at here, cycles, we're saying we would look for either a low or a high to form, and then for this to change. That is so interesting, so.
Yeah. And of course, we're probably one of the few analysts or analytical teams out there that actually projects out in time, where most people do not. They're basically a price focus. So just, as we moving forward here with askSlim.com, and of course you have a major role in here as an analyst and a partner in the business. How do you see, askSlim growing here? Where do you see it going?
So my general viewpoint is that we are here to make your lives easier, right? So we do a lot of work creating things that will make your lives easier, so that way you can then make money over time and do well, right? So that's what I see things continuing to follow along that overall way, and really what we've been doing for the past, since I joined the team back in 2015, closing in on 7 years now, following through with that, but just growing faster and doing things better and making things easier for you. That's really what our goal is. So yeah, I see that just
I mean, continuing. You've done a great job, building a lot of the algorithms and in our studies, and everything is about, the trader having a better understanding and feel for the market. Because, as we always say, your success is our success for the trader out there. So that's all we're doing, is trying to get more successful traders so that our business will continue to grow and they'll continue to do better.
Absolutely.
Great. Yeah. And just a high commendation to RV and our whole team is that this is an amazing team. I mean, everybody works together so incredibly well and always supporting each other, and always the focus on how we can make our viewers more successful. RV, great to chat with you here.
Same here, Slim.
And I know that we have a lot of years going forward. We'll be together.
Absolutely.
All right. Thanks a lot.
Thank you.
And I hope the viewers all got a good sense for what a great person and great relationships we have here at askSlim. Thanks.
Thank you.
I love that. That was so good. Of course, RV, a great member of our team. All right, timing the bear market using the FANG stocks, which are telling a dismal story. Of course, these FANG stocks have been under a lot of pressure, and Apple was kind of the last holdout, and then in the last week really came apart, and that was based on news that came out from Foxconn, their supplier, that there were both supply and demand issues that they were seeing. So Apple got really hit on that, and I'm going to show you why I don't think it's all over on the downside in Apple. What we really want to do is we want to look at these 7 stocks that we're going to look at, the FANG Plus, and then use the projections in there to give us some sense around how long will this bear market last. Of course, in bear markets, you get very big spikes to the upside, and then they resolve again to the downside. We expect that to be happening, and certainly with the big declines, there's room for rebounds. But overall, this is going to show you trends that are strong to the downside. Let's look now as we look at the weekly chart on Apple. For those of you that are brand new, this busy chart has a ton of great information on it. And our work, cycle analysis, really looks at 3 different major components, where we look at the actual rhythms in the market, and that is depicted by these drawing tools on the bottom called a cycle bracket. And we look for the rhythms in the market, which are measured from low to low, as you can see in here. And you can see how these lows line up right here and there and here and then here. And then, something's going on here. So what happens and how head and shoulders tops are formed are you get a cycle that, leaves the left shoulder, you get another cycle that makes the head, and then you get the next cycle, which rallies, doesn't get up to the high, and then fails below the neckline, and that completes the head and shoulders, as you see right in here. And then the distance from the head to the neckline is measured from the breakdown to the next level over here, and that gives you your projection. So our cycle analysis here in Apple suggests, as you can see, these beautiful rhythms in here, that this was a positive cycle because it's a higher bottom and a higher peak. This one also, and this is now a negative cycle. Each of these, of course, you can see projects out to the declining phases coming towards the end of the cycle, and that's way out over here. These lows projected timed to September, October. And the price projection in here is down to about 130. You can see in here our September, October target, 130 to 138. So that's the 27% and the major 78.6% fib. That's where those supports are. And look at this neckline measurement coming up here to about 130. 130 is a good target here between September and October. And yeah, there's room in here for rallies and rebounds and all of this space, but it's very likely that those will continue to fail. We're going to target this area right down over here in September, October time frame. And that's important. I want you to remember this formations in here and the likelihood that this cycle here does not bottom until the September, October period, and this declining cycle, which points out this way. Remember all of that, because now we're going to look at 6 other stocks, and I think you're going to see what we're talking about. Facebook, which in the FANG, Facebook, of course, would come first. Let's just put up this weekly analysis right here. Facebook actually might have put in a little low there, but it is very negative also, and you could see the time frame in here for this cycle right there. You'll see that little ghosted cycle right in there, which bottomed at this point. Either one of these could be the bottom. And if this was the bottom, then this already broke down. And if this is the bottom, then, well, it could get up close to this area here around 240 before it then turned down again. But again, look right over here, September, October. That's the time frame for these next cycles to bottom right in there. And with this momentum, and I didn't mention momentum in Apple, but this is our reversal scout right in here, and you could see that when it turns down, that sets up the declines in these cycle phasing right in here, as you can see right in here and here and right in here. Here it tried to rally, and already the momentum is turning down. This is not in good shape at all, and we're going to target Facebook to get down over here 150 to 133 sometime in September, October. So there's that September, October time frame. Once again, let's get back to the A stocks, Amazon, AMZN, and here is your Amazon right there. We'll put up that. This is the way the chart looks without analysis on it, and this is the way it looks with our analysis on it. This is a horrible chart. Again, you can see in here these cycles right here, and where these stars are is where the bottom of the cycle is. This bottom then rallied, hit resistance and failed, and then got under this low, which is a big bad breakdown, comes down and nails this fib extension, as you can see right there this week. And that extension level is the 127. You can see that right there. And then lots of room to bounce in here. And then again, coming down. The best price we could see it is around this 2030 area. But if we put the next extensions in here, that would be even lower. Again, the level, the time frame in here is a little different. So this is August to September. So that makes a little bit shorter time frame in here and may bottom sooner than some of the others. But you can see in here Amazon, a very ugly pattern. Note the cycle rhythms in here and how beautiful they are and how these bottoms line up so perfectly on those cycles. If you don't understand cycle analysis at all, well, you can get some idea of it by going to askSlim.com and go to the workshop tab, and there's a video in there that really helps you for free to get some sense around what cycle analysis is, and it shows you what all the modules are in our cycle analysis workshop. It's unbelievable. We've had many hundreds of people take that workshop, and it's just a fantastic workshop. So take a look over there. Amazon projected not to make its low until August, September, and some rebound in here potential, but not likely to be very significant. So that's the third stock. Let's look at Netflix, NFLX. It has gotten decimated. Again, here's your Netflix pattern right there. And if you add in the cycle analysis, well, that's what it looks like. So this, the cycles that you can see in here, they're a little bit longer than some of the other ones, but look at the low here and here and here, and this horrible, we call this a left-hand translation, where it only rallies for a brief period of time, peaks on the left side of the cycle, and then comes down and breaks that support level where that low was. Momentum in here turns negative. There's some support here at the bottom of this fib extension zone around 126. Well, let's just call that a target. And again, this is a little bit different timing also. This is somewhere August, September is where that low likely is, also a little bit like Amazon. So, but again, you get the sense that this is nowhere near where the bottom is going to be. There is just a lot of time and a lot of price to give up before this is over with in Netflix. NVIDIA, of course, one of the darlings of the semiconductor category, that's a NVDA, also has been a great stock. Let's put the weekly analysis on there. I mean, this stock comes from basically nowhere to 346 and now comes all the way down here to about 155. See, it gets into that fib target zone, but this is so ugly when you look at this. Now, let's examine these cycle patterns a little more closely in here. Again, it's the rhythm of the market, the heartbeat of the market, as you can see in here, and it is so clear. And what is so clear is that when this rally comes and gives up more than 78.6%, the odds are that it will fail in the resistance zone and come back down. That was so perfect. Well, the cycle low support is right here, and when it breaks down, it's negative. This is August to September over here also. So you can see August to September, or some of them to October, is where that low is likely to be. This target right over here is about 150. It could be worse than that. This major support over here is 116. So 150 down to 116 sometime August, September is the target in here. And if it were to be able to rally into this area, it would be a sale because it is just so risky. This is a very negative pattern looking at that. Two more to go in this FANG Plus category. Google, G-O-O-G-L, is the one we're going to look at here. And again, without our analysis and with our analysis, and another one that has broken down. You can see these arrows right in here, which show you the configuration. Bullish cycle, bullish cycle, bullish cycle, bearish cycle. You can see it's lower, it ended lower than it began, and then this cycle fails here in resistance, comes down and breaks the support, and now points out over here. This is July, August for that low, so even a little bit sooner than that. And the downside target in here is around 2,000 in Google. So that's the intermediate 1.618 fib extension. It gets some support here at the 127. Again, it could rally out over here a little bit and get higher, maybe even 2,400, maybe even 2,500. That wouldn't matter. This is where a big risk is going to come over here and likely to see a decline into this late summer to early fall, just as we see in the rest of this group. And the last one is Tesla. Tesla was a real holdout. I mean, it was really strong and doing really well. And again, let's look at what it looks like with cycle analysis. And there you could see the rhythms in the Tesla market. Again, we look at three components of our analysis: cycle analysis, the momentum conditions, and the swing high, swing low analysis, where we identify support, resistance, and targeting zones. And you can see this is so key. Comes down, breaks below the 78.6 here by a lot, almost gives up the whole 100%. Comes up here, hits the 78.6 and fails and engulfs right in here, and then breaks down and gets below the cycle low support here. What does that point to? July, maybe even August on the downside, and we'll put a target in here of about 465 on the downside. It could get support here at about 608. That is a possibility. So we'll call it 160 points down, from where it is now as a best case, with a potential for 300 points on the downside in here. This points again to late summer, potentially early fall if it extends out, and many bear markets extend and get a little bit longer. So this is a really ugly pattern again, and again, it really needs to be sold. All of our analysis on these are available for our members, and the daily analysis will have those resistances in there and sell zones for the rallies, which our members do get to see. That is a look at timing the bear market by looking at the FANG stocks, which really are telling a dismal story. Much lower prices for a much longer period of time. And if you heard my comment at the beginning of the Market Week show, I really said that, well, the good news is that the bear market's half over. Well, the bad news is the bear market's half over. And we could see the NASDAQ, which of course led by this group of stocks, be 50 to 60% down ultimately from its all-time high. So that's a look, and I think a very important look, at these very important stocks. All right, our stock market analysis is coming, but first, our special offering of analysis and content. Don't scroll forward because you're going to miss 10 reasons why you should become a level 3 member. And I think you're going to just absolutely be amazed by the offerings that we have for practically no money. So this is the trial offer for level 3. Just take a look at all of this. And this is our special trial offer for level 3, education, analysis, and support for traders and active investors. Here are 10 reasons to become a level 3 member. Take a look. And then you can see what our special discounts are for 1 and 3 month trial memberships, where you could sign up at the top of our front page or write to Matt at askSlim.com for information. Here are those 10 reasons. First one is we offer you our Slimulator ranking system. This is an amazing page where you get the 84 best traded symbols with weekly and daily charts with cycle analysis that's updated every day, momentum conditions in 3 time frames, and some of the evidence directional bias on all of our 84 best traded symbols that we look at. Also, what you'll get, number 2, is our trade ideas. This is analysis to help with directional decisions, target zones for entry, and for the levels that we believe they're going to go to based on this analysis. And you get a teaching video with every single idea. Arvi does an amazing job with that. You can just roll over and it highlights the trade idea and the status of those ideas, or you can click the bell on the bottom for notifications. You can also get our stock index report. This is a daily snapshot of which Matt does just a spectacular job with this. He brings you so many things. Here are just a few examples. Trend, momentum, technical evidence comparisons on the 3 different indexes, and our 2-hour charts with our proprietary studies on there, and our daily chart with the cycle analysis, slim ribbon, reversal scout, and so much more that's in there as Matt guides you through your index trading. You'll also get our live stream SIR, stock index report on the SPX, NASDAQ, and Russell. These are 15-minute charts with support, resistance, and acceleration zones, and our reversal scout. This helps you stay on the right direction for where momentum is that day, and those yellow zones show you where it's likely to accelerate down through, and of course support and resistance is where there's a high probability that it will stop in either direction. Also live are our live charts on chart streams with all of our proprietary studies. On the left here, what you see is, again, how you access that 15-minute charts with the SIR intraday, and then 10 more symbols in here with all of our proprietary studies running live. You don't need any special platform. You just do it through our platform, and you will just be amazed at the quality of this information that you will have in here. Also, you'll get our complete video library. We put 3 new videos in each week. There are 9 video categories, over 500 videos in there, and you can see all the categories: future speak, tools for text, trader psychology, IRAMO, stock sectors, big picture analysis, style strategy plan, market week, of course, with the archive, and our askSlim live archives, where you can see what our live events look like. You'll also get our new cycle low timing tracker. This is our focus list with the phasing of the cycle analysis that we do, where it gives you the time frames for big downside risk late in cycles, bottoms pending, and bottoms in place, and more, to help you get a good sense for the condition of these best traded symbols. Also, you'll be able to participate in our Discord server. There are lots of things on here, questions that we'll answer in every single category that you have. And then our analytical team runs what they call office hours 2-3 times a week, where you go in and you can ask questions live. It's just an amazing way to be part of our community and to be in touch with our analytical team. You're also going to get our brand new in beta futures hub. On that left, you can see the indexes, treasuries, currencies, metals, energies, grains, and softs. The colors show you the conditions based on the intermediate conditions. The video is down here for future speak, and if you click on any of them, it opens up this window over here. You'll get our weekly chart, daily chart. You'll get the individual video analysis, where you can go right to the future speak show, to that spot on the video. If you click on this, it opens up, gives you all of our technical details, timing for bottoms, cycle conditions, and more. And if you're a level 4 member, this is where the TOS link is. There's nothing like this anywhere, with all of this analysis on all of these futures for traders, active traders, that you can get anywhere. Nothing like this, absolutely anywhere. Fantastic. And then you will also get our Slimulator Momentum Tracker. This is for position traders, longer term holders, over 1,000 symbols, 22 different watch lists. This is where you're going to get all of our information, like our directional bias for an outlook of 3+ months. And you can see we let you know what we believe the conditions are on these individual 1,000+ stocks that are in there. All of this with our built-in algorithms. Just unbelievable information that you will get from this app. It's just great. All you have to do is go to askSlim.com. This is the final week. There's only 1 week more of this, and you can go to the top page and sign up now, and you'll have a choice. You could take a 1 month for 50% off. That means everything I just showed you for $59.50 for the first month. Normally it's $119 a month. But you could take a 3-month trial and get 30% off. You'll save more. You'll save $125. And that only comes out to $77.33 for the first 3 months each. Unbelievable information. You want more info? Write to Matt at askSlim.com, or go to the top of that website at askSlim.com and click sign up now, and you'll be able to get this amazing information. All of this, 10 different reasons. No other site gives you this type of comprehensive analysis with all of the support we bring. Don't be alone as a trader. Go on our Discord server and you'll be able to get info from our analytical team. This is just amazing. Please go and sign up right now. Only 1 more week to go. And do make sure that you do go to askSlim right now and go to the top of that page and sign up for our level 3 special. Remember, there's only a week to go. All right, this is the stock market. We're going to take a brief short-term view of SPX. We have talked about the fact that the intermediate patterns suggested that the market would decline into early May and then get a rebound. And that rebound would probably take you up through late May to early June. And now there's been a lot of damage on those intermediate patterns, and we don't actually think that the upside is going to be as strong as we had originally thought. The timing could be right for a rally, but again, it's not likely going to be as long-lasting and as sharp on the upside. Still, from the low that we saw this week, the S&P 500 could get a pop of 220, 225 points, maybe even 275 points. The resistances I'm going to show you are very key. Now, our patterns have changed a little bit, and that happens when markets get severely oversold on the downside. What happens is that the buyers, the short covering, comes in very quickly on the really short-term patterns, and you get these big upward spikes that come and then fail pretty quickly. And that shortens up what we call the cycle rhythms. And I'm going to show you that in here, and we've shared that with our members today. So we're going to move off this Tesla chart, and I'm going to move to SPX and put it up on the daily chart. So for those of you that are brand new and looking at this for the first time, we look at cycle analysis, which has these rhythms in the market, and those half moons or half circles you see in the bottom are simply a drawing tool. Here on Thinkorswim, if you go to the drawing tools on the bottom, you see this little thing right there. That's these kind of wave actions as you see. And we use that as a guide. And what this movement in here is simply money flow that we look at. So we have a sharp rebound going on right now. And it doesn't quite mean that this particular decline that we've had is over with. It is just potentially a small rebound. Now, these yellow areas right over here, those come into play when you get into these third minor cycles right in here, lining up with what we call a nesting on the dominant cycle. Now, the harmonics that we had in here were 12 and 36. With a 24 cycle in there that had been losing power. And we've removed that 24 because it really is not lining up well anymore. In addition to that, these harmonics are shortening in duration. We had looked for a bottoming phase here May 3rd to May 10th, and we got a bottom on here on May 2nd, and then a rally, but that rally failed very quickly, and that has a very negative message to it. So what that means is that this next cycle in here is likely, the highest probability is that you had your bottom and failed already, and that would set up only these rallies into these minor resistance areas as that you see here. So what that is going to look like is that there's a lot of chop and rallies that fail, and then out over here is a period of some bigger risk. So as we get towards the first week of June to maybe the third week of June is that last minor cycle right in there. So let's take a look just these last cycles right here, and you can see where we are right now. Now, as I said, these minor cycles in here, which were averaging around 12 days, are shortening. You can see in here, this was a 10-day cycle. This was a 10-day. This low right over here is only 8 days. If that's the low, you really get a sense for how these cycles are shortening up. However, you can see what happened right in here is this was an 8th-day low. You had a big rally day, and the next day it got whacked. And that could happen right in here for a day or two on the downside after this rally day on Friday. If this continues to go up for a couple days, then you'll know that it's shortened up again by a little bit, and we're basically in this rally period right here. It's a little hard to tell right now. The probabilities are still high this will fail. It's important to note that momentum is a very important aspect of the work that we do. Our momentum indicator in the daily chart is the slim ribbon, and you can see that right in here. And as it widens, it gives you more negative momentum conditions. And it often acts as support and resistance, as you see happened right in here, as you rallied into the resistance area and then you failed below this level. So what we're looking at here on the bottom is the slim ribbon PO, which is the signal indicator for the slim ribbon. And when it's red, it's negative momentum. And when you get the arrows, it is resumptions on the downside. And you can see how fantastic that was looking at that. If I go way, way back and I look at a time frame when the stock market was bullish, way back over here before the stock market peaked, and you can see those cycles in there. You can see it's green and giving you the up arrows, and the market continued to move significantly to the upside. Now where we are is the slim ribbon PO right in here, giving you these negative signals, as you can see, and suggesting that rallies will continue to fail. And sometime right over here, you're liable to get another one of those because the slim ribbon's probably going to give you resistance right in there. So what are the upside targets for this rebound that we're in right now? If it holds or it doesn't hold, and let's say it comes back down over here, this is still the minor resistance sell zone area. That's based on this peak to this bottom right over here in this swing high, swing low analysis. And these resistances, which right now the market is getting close to, are at about 40.30. The middle one, the 50% level, is 40.82, and this one is 41.40. The bottom of the resistance that comes from here to here is right over here at 41.65. So if the market really got some legs and a rebound on the upside, 41.38 to 41.66, that would be, in my opinion, the extreme on the upside, and I would look for big failures anyway out on here. So what this looks like right in here is that the time frame for the rally is something out in towards the third week of May, up to these levels. That would still be, if it made it up here to 41.40, that would still be like a 280-point rally in here. And I was saying to some of my trader friends, I thought we'd get a 250 to 300-point rally off of the lows, and then it would fail. So that's really what it looks like. Either this is this minor low, or it will fail here and comes down one more time like it did right over here, and then you get that next rally in here. Right now, for very short-term traders, it looks like you could trade your bias on both sides. However, when momentum is negative, as you see right over here, your long side trades have to be much smaller. In other words, I even say a quarter of what your normal trading is on the long side because of the risks of failure, as you saw through this whole period right in here. So, from this peak here where it was a negative momentum in the S&P 500, 4,500, all the way down here to 3850, that's 650 points on the downside, because this negative momentum joining in with the intermediate pattern negative momentum pushes so hard on the downside. It's still here. That has not changed. And while we're looking for this rebound potentially out to the third week of May, potentially to this level or this level, it still suggests that the market will continue to fail. And ultimately, if you watch the previous look at the FANG stocks that I did, and if you didn't watch it, go back to the Market Week show and look at it. It projects out, a way out into really August, September, October for the ultimate low. This cycle right over here, this next one over there, bottoms out in July. And then the next one out of there will bottom in September. So there are a lot of these harmonic families in here that are going to point to the downside for that long period of time, and that's the nature of this bear market. You could get big rallies, as I said, but they are very likely to fail, and we're going to look for this one that it's in right now to maybe pull back or maybe not, and then ultimately come up somewhere close to the third week of May up into these resistance areas that I spoke of, and then more failures on the downside. As you could see, these cycles are now projecting. So these do change based on the information we get out of the market, and the information is fresh every day, of course. So we look at this and we update it every day, and what we bring are the highest probabilities based on the sum of the evidence analysis. You want to know how bad the condition of the market is? Here is all of our proprietary indicators right in here I'm showing you. We're looking at the S&P 500, the QQQ, the IWM, the Dow Jones Industrials, and the Transportation Index. All of our four major indicators that we have developed proprietary for our level 4 members are all very, very negative, and rallies, though they could come under these conditions, are very likely to fail. This is really a bad picture that you see right over here. This is our market monitor, and if you want to get our market monitor, all you have to do is become a level 4 member. That's it for the S&P 500 and a really potential continued bounce with a overall quite dismal picture for the stock market. And again, go back and look at that video I did on the FANG stocks, that little segment earlier in the show, and you'll see what I'm talking about. If you want to get our weekly and daily analysis on the S&P 500, NASDAQ, and the VIX, of course, that's in our Future Speak show. You could get that following this clip right over here. If you're watching this on YouTube, you're going to see what this special is for level 3. It is mind-boggling. 10 different pieces of analysis that we bring you, analytical services for our level 3 special, and that's coming up right after this segment. If you're watching it on YouTube, if you watch the whole Market Week show, you will see it at that point also. So go back if you scroll past it and look at that level 3 special. It is incredible. That's it. Make sure that you go to the askSlim website and become a free member or take one of our specials. If you're here on YouTube watching it, subscribe to the channel, click that notification bell. Make sure you give us a thumbs up and like this video, and watch our member videos in the playlists that we have in there. And on Twitter, follow us at askSlim. And for any questions you have about all of our huge offerings of education and analysis, do write to Matt at askSlim.com. That's it for this show. I want you to be so incredibly careful. It is so crazy out there. And I'm always wishing you great trading.